take a look at what the wise experts have to say as we get set for trade this morning. Here's the equity market call. Paul Kitney of Daiwa Capital Markets says they are bullish on Asia ex-Japan financials, particularly in ASEAN and in India. They believe India is seeing strong lending growth due to strong macro fundamentals, and they expect lending growth to accelerate in a disinflationary environment. He says the RBI recently cut its reverse repo rate to 6.25%, and there's plenty of scope to cut it further as CPI inflation has dropped to 2%. This, in turn, is leading to a steepening yield curve and should result in stronger lending growth. Daiwa includes Axis Bank and HDFC Bank in their animal spirits topics.
Okay. Well, it's, I don't know how Paul Kitney could make that mistake, but they cut the repo rate to 6.25 and the reverse repo rate to 6%. But anyway, that's just a detail. Money market views. Pramit Brahmabhat of Veracity says, considering the geopolitical situation, he expects the rupee will be range-bound in a wide range. Trading range for the spot USD INR today would be 70.80, 71.50. That's a rather wide range.
And let's get to bonds. Dhaval Dalal of Edelweiss says the government bond yield has edged higher in response to rising crude oil prices, tight banking system liquidity, and an increase in geopolitical risks. They expect some respite in the near term. He says crude oil prices are likely to cool down amidst lackluster demand and the call to keep prices in check. The Reserve Bank has announced plans to infuse 25,000 crore rupees through OMO bond purchases in the first half of March. Market participants don't expect further escalation in geopolitical risk at the moment. Based on all this, they expect that the 10-year bond yield will remain range-bound between 7.40 to 7.45% in the near term.